All right, let's get into it. Where we at? 10 to 11 on the 20th of March. Had FOMC this morning. I don't know if too many people sort of got up to sort of see that early morning. It was pretty a non-event kind of sort of stuff. It wasn't any sort of groundbreaking kind of oh my God revelations with it all. But certainly, US dollar ultimately just took a whack in that. So we did see a little bit of buying up yesterday through sort of Asia, US, actually through all the sessions of that, sort of right up until that early hour just before sort of FOMC came in, and then sort of obviously US dollar just got crunched. And it wasn't a normal sort of price action around these events and that where you kind of see it going up and down, and here's a question and it changes it, and here's a question and it changes it. It's really sort of kind of yeah, it just was a one-way trade, and yeah, certainly sort of Aussie jumped off the lows and that about I think 50 points, 60 points or so, 40 points, something. It was a fairly decent sort of little punch up to the top side there. Gold sort of recovered somewhat a little bit as well. I mean, not that it really needs to, to recover so much, but you know, as soon as we got the chart up, we can have a look at this one at the moment. Look, gold, it's a bit hard. Like it's up in the stratosphere. It's just strength to strength to strength with it all. Um, it's hard to sort of pick, is this a top? Is like, you don't want to sort of continually try to sort of call tops and fade these sort of things. But, if we were to be seeing it, what I was looking at least early hours of this morning, and still now this sort of three drive, the negative D was sort of, the neg D sort of was setting up at that stage because we were just around this point here, as you can see. Technically was making a new high, and that buying pressure was again one, two, three, coming in a bit lower. Obviously, sort of since we've sort of opened up this morning, it's the price has sort of stayed elevated, pushing up a little bit higher, and that's obviously got that RSI to sort of respect the actual move up higher. So the neg D is kind of negated through this period here. So we could drag this back here because that was obviously through this little period, and we saw the reaction as it did come. So where it's at right now is it's still sort of valid for this sort of three drive kind of thing, where one, two, three. Typically, three drives are little top areas and that, like it's just trying to sort of suck out as much as it can, burn out any sort of early shorts, early shorts, early shorts. But as I said, look, we're right up at all-time highs. It's not giving up. Anything that it has given up, it's obviously just bought straight back up again. And I don't think FOMC was any sort of like, oh, okay, yep, that's it. Let's jump back into the US dollar like crazy. We did see a little bit of a sort of somewhat reprieve effort, so to speak, from DXY, but subsequently just got sold back down again as well. So I think till we get sort of that DXY pushing up, uh, there's actually sort of no reason why this is necessarily going to stop here. Look, if it does, this is certainly the line for it to come back down. This is your break level 26. I think I was saying 20 or 20. I think I know I was saying 26 yesterday was the level that we wanted to sort of see it sort of beat and close under. Sort of really came down. Was this? Yeah, so this was end of Asia. Sort of really came down quite hard here. Came down second effort and obviously sort of held that. Buy stepped up a little bit and then pushed up through there. So if we actually put it onto a lower time frame, we probably want to see it almost looks like a little bit of a triangle is kind of forming here. Center. But yeah, you can see almost like a little bit of a triangle sort of forming through here, which obviously bang sort of shot out to the top side, and that's as 5 o'clock. So this candle here, this is on a 30-minute now. This is FOMC, and this is sort of perfectly kind of shows that it just went up, came back a little bit. So it did actually respect this rising sort of resistance level. So this three drive. So the market is watching this on the top side here. So look, the three drive is probably the only thing you've really got to sort of say that, hey, hold on, wait, this might be getting to a little bit of a top. As I said, the line to beat is down back over here around 26. So what are we at? $24 drop off from this point over here. We're over, it's 1 hour, sorry, 30-minute. Moving towards overboard on the 1 hour, 4 hour is actually sort of still a little bit of a negative kind of divergence here, because if we have drag this one across here, you can see that obviously RSI is not respecting this move up higher here. Now, as to sort of whether the market actually listens to that or not, well, it remains to be seen. But as I said, it's hard to sort of be going, yep, cool, this is it, this is the top. And even if it is to be, okay, air quotations, the top, how deep is the pullback going to come? Because there's heavy, heavy levels. Like, if you get back down to 3,000, you should expect this to sort of come in as a bit of a sort of support area. I mean, that even just with this last push off from that consolidation down here, still takes you 78%, which is quite a deep sort of pullback. What's that, $50 pullback though. So look, I would say any sort of move potentially back down under 26. This is the kind of area that I'd be looking to sort of pick up a couple of longs from. I think I've said it a few times and I've missed the boat where I've said, look, I'm reluctant to sort of buy at the highs and it just keeps on going. But I think that sort of is the best protection at the moment. Let people sort of chase it while they're up here. As I said, this negative sort of divergence that we have going on here on the 4 hour, the fact that it has this 3 drive, just to me just makes things a little bit iffy. I think sort of DXY really sort of at the moment it's just opened, it's just gapped down a little bit. If that breaks down underneath the supports, which are major supports, I think we could see this thing push up a little bit higher. I did say yesterday, or it was on the weekend, I can't remember, one of these days, they kind of all blur together in that. But if you looked back onto the first break of 2000, so I can actually do it here. So the first break of 2000, I think it went up to 2075, if I recall correctly. So it must be around here. So this is 2000, first time breaking it, and went up to 2080. So in terms of percentages, if you just marry this up a little bit here, so close enough, good enough there. That's 3.79%, which is actually a little bit higher than I sort of thought. I was thinking around sort of 3% or so. But of course, $75, but that's through 2000. So you take the percentage amount and say it was to go through 3000 at 3.79%. That gives you over 3,100, I'm quite sure. So it's from 3,000, close enough, good enough. It just goes up and up and up and up. And as you can see, we could potentially still have quite some room to move. There's 3.7%. So yeah, over $100. Takes you up to 31.11 or 31.12 and change. So $110, and it sounds big because obviously there's a $100 move, and a $100 move in gold traditionally is massive. But you got to remember that because we're dealing with larger numbers now, the percentages are still the same, which means that these things could still shoot the same before we see any sort of cooling off. It is a bit overbought on the daily, as you can see here, but potentially this could be moving up towards that 3,100 mark before we actually see some sustained sort of pullbacks. So, I think even if we do get something on a lower time frame, say the 4 hour, and we see some sort of pullback here, I don't think this is going to be the top of tops. I think this is going to be a pullback, reload, snap out the sort of longs, and then reload down here, and then target that 3,100. I think that's potentially sort of where we could be sort of seeing price going in the sort of medium term before any sort of substantial sort of cooling. All right, so that's a bigger picture. The small picture here, I guess, on the 1 hour would be some sort of break back down underneath 40. I think that's your kind of line in terms of what we've sort of seen through here. You could say that that's a zone through here. Yeah, maybe a little bit earlier there, but I'd say a close under 43. You might sort of this wick here kind of makes me a little bit sort of cautious of sort of going, sort of jumping on too early. But I would say you'd want to see something roll over down here, really underneath 40, and then you could be sort of targeting this area back down over here as to sort of 27s, and then that would be your sort of confirmation for the next leg down there. So it would be something to this effect. Direction. So if we get underneath here, when we push down, and then underneath. Look, I'm going to make this a little bit more because again, you're going against the trend here. So I'd say that's probably your trade through here. You could probably expect some sort of reaction at these previous highs. It's obviously a previous highs held support, but as you can see, they're buying dips very aggressively. So even a sort of shakedown here, I would say there's a good chance that that sort of gets bought up. So I think underneath 40, you sort of target this area down here. Where'd that go? Put this here, and then underneath 26, then you're sort of targeting the area there. Top slide, obviously, just a negation of this rising resistance, bang, and it just sort of charges on, and on it goes. All right, and flip across, we got the other metal, we got silver. And silver's got smacked down yesterday, so as I said, I was looking for that sort of move down towards 33. Got quite a good sell down, actually two solid sell downs, but again, as soon as that sort of FOMC kicked off, bang, silver just up. It got a little bit of a push back down afterwards, but as you can see, it's still grinding a little bit higher at the moment. This I'm still not convinced is going higher towards the sort of 34.67. Obviously, happy to be proved wrong in that if that's the case. But I think if we sort of almost drag this up here, we can see a bit of a zone more recently. Like this was the zone down over here, but I don't like my zones too chunky. And yes, this is where the sellers were previously, but more recently we can see that probably this is a bit more of a resistance, support, support, resistance, resistance, and it's trying to sort of push through there at the moment. So again, DXY sort of crushing down. We'll give this another push up. A test over 34, 34.10 seems to be the next likely spot for it on the top side. This one there. To sort of see what the sellers are going to do there, because again, you'll just look at previously, this is where we've sort of seen them dance around this line over here. Let's get this out of here for now. Try and keep the chart a little bit clearer. So yeah, if this pushes through, yep, 34.10 I think is going to provide a little bit of a sort of resistance, so a little short trade there, 20 cents or so, which you know what I mean, in the scheme of things, just under 1%. Oh, maybe it's not, maybe about 0.6%. Interesting while we are on this, because flip over to sort of gold silver ratio. Gold silver ratio obviously coming off that resistance that we're sort of seeing here as well, where we have previously had some action happening. Buyers, buyers, sellers, 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 and then first touch back into it, bang. I'll just recap with this as well, because this is that negative divergence that isn't technically really a negative divergence, but as you can see, it works just the same. So it's not about necessarily having the strong, oh, here we go, bury it. That's what the textbook says. This is also a way that you can read it. The reaction wasn't super fast, but it did sort of play out in the end, and actually went a little bit higher than I thought it would have. But the point is that it came back down to the support level on higher buying pressure. So the selling pressure wasn't as strong as it had been to get down to that level, and then you can see the reaction that's happened afterwards. The fact that it's pushing back off this sort of resistance level here at the moment is why we're sort of seeing as well a little bit of a sort of push up with silver, because remember, pushing down on here, gold silver ratio, silver would be the sort of probably preferred trade. We're actually seeing gold push up a little bit higher now, 53. So that seems, just have a quick look back across at that, and looks to be sort of pushing up there. So we'll see what happens once it butts heads with this resistance level again. Put a little light on it. This thing kills my ears with the headphones on. All right, cool. Flip along, keep going. We've got DXY, and this is obviously what the driver was of yesterday. So, look, we've got this big support line down here. We know that it's here. It's on the high time frames as well. This is the level that buyers have really got to hold. We did see that last, as I said yesterday, I like to sort of title these things before we get title, start that one again. I like to title these things and that each day. This is like, summarize each individual market, obviously do these analysis, pick the levels, but then summarize the whole sort of thing and give it a bit of a title as to theme of what's happening. And one last hurrah before a drop was the sort of title of it all. So look, it could be applying to obviously, well, it is applying to the DXY here. I thought we may have got a little bit of a higher push. up over here. Obviously, got smacked on the nose as soon as Powell started talking, but it also applies to sort of USD one, and also could be also gold in its last drive up there as well. We'll have to sort of see how these things kick off. Where we're 11:05, just got to keep an eye. We've got data coming out for Aussie employment data in 25 minutes. Anyway, on with the chart. So we can see obviously here, this is a crucial level. Buyers were here previously. They gave it a very strong push through here yesterday, leading into that FOMC. FOMC, as I said, it wasn't really a shocker. They were expected to hold. They did hold, and wasn't really anything sort of groundbreaking with what Powell had to say. And the market, as you can see, really just said, screw you, bang, and dumped it straight back down. Had a little bit of a bounce, but as you can see, it's just dribbling off down over here again. So look, I think a couple of touches over here. Let's come back into it very strong. This is the alert down the bottom here. You break this, you probably see gold go to 3,100 or go towards 3,100. You'll probably see silver push back up a little bit there as well. Aussie back over 64. So there's quite a bit of sort of riding on this line. As I said, I think that this is going to be the major break, which is going to take us down to those 101 targets that I've been sort of going on about since January. So yeah, we'll have to sort of see how it goes. But certainly, there was nothing in it yesterday for the market to go, yep, cool, let's start buying this. All it did from a technical standpoint was take out these first levels of potential sort of highs and shorts there. It would, if it had got up and sort of kissed this level over here, where we kind of thought, look, sellers will come in here. You could have said, as I said yesterday, like a potentially range play happening, but that was not the case. And yeah, it certainly yeah, they they hammered into that. It spent the whole day grinding up and then just bang, right down. So, and as I said, typically with these FOMC bits of data and press conference, particularly afterwards, as those questions are being sort of read out, you'll see one question, the market will go one way, and another question, market will go the other way, and it's chop, 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 chop. But if we get onto a low time frame, you can see that just was not the case. It just went boom down. A little bit of a bounce sort of in the sort of latter part of the press conference, but as soon as it really finished, dribbled down, and it's opened and left a gap this morning and sort of dribbled down again. So gold pushing up 30.54 at the moment. So yeah, we'll see what happens when it comes down into this zone here where the buyers have been previously. If they give it another go here, then you might have something going on. If they let this go through here, I would expect quite a few big breaks across the board. Top side, you'd probably look again. It's hard to sort of say, look, what could you really want? We can see sellers are driving this here. Not really a fan of that bottom line. No, look, I think sort of realistically, you want to be getting it above this one here. Like some sort of other color. Yeah, there's no real. I mean, this is such a low time frame. It's hard to sort of pick that one there. But yeah, again, above maybe 103.50s, but then you're running into 103.60s. Really, you got to get back above 104 if you're going to see this do anything. It's got to hold this bottom level down the bottom here. That's the risk right now that we see this move happen, and you see major breaks across the board. Excuse me. Okay, and along on Aussie. So this was another one. This played out beautifully yesterday. So I was saying that, look, there were the two levels through last two sessions actually. So first one coming down here. This is where we expected buyers to be, and they just picked it straight up. Came into this little resistance, and then we're saying, look, what I mean, target 40. The video yesterday was target 40, underneath 40, come down towards this level over here, between the 61 and the 50, where we've got this sort of little bit of a horizontal. We've got the back test of this falling resistance. And this is what I say, here's your breakout point, here's your actual low, technical low through there, and they just took it off from there very strong. I actually had this on, because chart on a couple of different ones, but the measured move of, which one was it? I think it was this move through here. It was on the different charts that we had. This is the move down here. It came pretty much to the point. Well, there we go. And the reason I sort of point this out now is because if you drag this, whoop, Bang. There you go. And as you can see, that measured move that came right down here, clipped it, and then just took off. The reason I point it out now, because I was charting this on the IG charts and that I was using for my shorts, is because sort of when you see the market respect the chart so much like this, you know that there is some sort of structure to the mayhem. It's not just a sort of like, okay, let's just crazy free for all, sell it at all costs, and then you get people overshooting, and it's a bit mayhem, a bit sort of wild. Um, when it does respect the chart, that's, in my opinion, something that's very strong to sort of say that, look, these are orchestrated sell downs to accumulate to then potentially buy back up. And that's exactly what we saw. As soon as they started talking yesterday, Aussie moved up here. And as you can see, he moved up from 20 to 63. So 43 points in a straight line. It just went straight up through there. So, yeah, I mean, this sort of move down here, you've hit the technical levels on the higher time frame, you've hit the technicals on the lower time frame. And that goes to show, for me anyway, I sort of take that as, okay, people are sort of structurally sort of trading this to accumulate more to then, they could see that this move here was potentially going to be coming. So look, where it's at the moment, obviously coming back into those 60 zone, as I said, 60 seems to be a very reoccurring number for Aussie, along with 90s and 20s. So finding sellers here, sellers. First time, touched it, and then just came straight back down. Second time, third time, this needs to sort of flip and push through here. So we got that data out in just under 20 minutes. So that'll be the sort of potential for the catalyst to get that sort of pushing up a little bit higher. So if we put this up around here, so where we go. So again, as you can see, 90s, double rejection, bang, came back down here. I think if you get back up towards these 90s this time, that should probably be enough to sort of give it a bit of a push to go through, because you've got this sort of breakout, retest, that's your sort of thing. And like if we sort of put it onto the higher time frame, this is the stuff that I always sort of go on. You got the three legs of the move. Up, find resistance, back, find support, support at previous resistance. This is the leg we're in now. So this is the one that's important for Aussie. Aussie needs to break 64 on this run to sort of keep this sort of breakout momentum going. As you can see here, here's your breakout, boom, higher high, and on it goes. If this fails to break through here, then it's looking like a bit of a failed breakout, and then you could probably look at maybe a little bit of a range back down towards the 63s, and makes things a little bit sort of vulnerable down over here for the time being. Look, it doesn't mean the game's over. It just means that in this particular run, it's tried, and look, it's got RSI. This is on the 4-hour. RSI is set, ready to support the move, should it have the right data to sort of back it. And remember, we want low unemployment and then high employment. So I might as well look at the data just while we are coming into this. So here we go. So 44,000 previously, expected 30,000. So take that with a grain of salt. They never have a clue what's going on here. And remaining at 4.1%. Look, these are pretty good numbers in that, in terms of sort of how low unemployment is. It's very stable. If this ticks up, it goes to 4.2%. If this number comes in at 30,000 or even into the 20,000s, that will sort of weigh on Aussie. So that's what you're looking for Aussie downside. Employment 4.2 plus, or unemployment 4.2% plus, or employment 20,000 in that sort of region of that, and you probably sort of see things sort of sell back a little bit there. So we'll see how it goes. Of course, it's also predicated on what's happening with US dollar on a broad sense, so that's why we always keep an eye on DXY at the same time as well. Past that, we've got a bit of China data coming out today as well. Nothing to sort of note there a great deal. I mean, they're looking to hold on the 1 year and the 5 year. Rest of this, not really a great deal. Slow down over in the UK. 25 base point cut for a Swiss bank. And then you got the pound coming here, and they're looking to hold as well. So quite a few central banks meeting this week, because of course we had BOJ yesterday, which held. they were sort of more in the favor of holding. You got US dollar, Fed, they're held. Bank of England, they're holding. And you've got this sort of cutting idea with the Swiss bank. So we'll see how all this eventuates and plays out. All right, back to the chart. Cool. So yeah, look, I mean, it's only a pip or two down here, but we are finding sellers on queue here as well. So downside, you want to hold 44. If you hold 44, you're seeing this kind of almost inverted head and shoulders. Not a big fan. I like the head and shoulders a bit more when it's at the bottom of a full trend. This is kind of pullback, which can sort of work well. I used to actually trade a lot of sort of inverted head and shoulders on the Aussie and that, but then it sort of tended to not really play out so much. So I would say this is the level you want to hold. So previous to where we saw the buyers step in there previously on the way down, you want to see them revisit this level here on the way up. If they can sort of hold this level, this is provided downside of this data. I think this will be your kind of make or break. You're either sort of, oops, yep, either up from here or down from here. That's your sort of downside make or break area. So underneath 45 or 43, this kind of area here, put a little alert on. We're going to say failed rally. I'm going to call that one. So downside there, that's where I'm interested in looking. Breakthrough up here, then I think sort of up towards 80 and then 90 are your sort of top side targets for these ones here. Should you break through the bottom side here, I think realistically back to sort of 27, 25 to 27 is kind of your area there. So yeah, yeah, oops, yeah, yeah, bit wonky, but whatever. You get the gist. So they're the levels that we're kind of looking through today. All right, and along where we at? So we got copper. Copper can do no wrong. Copper is just absolutely obliterating everybody. Excuse me, which is really sort of given. Geez, imagine being short or something on this. Like these pullbacks all the way through this run here. Jesus, like it's all say yesterday. I was coming to this little point here. I had a little negative D. Get rid of this one because obviously it didn't play out there. But it had this little point here. Got to the pinch, and then it's just decided to choose violence and go up and run up through the highs over there. So we're coming up to major levels here. As you can see, this is taking us back. This is last year as well, May. So very similar last year because, of course, it was in March that we were down here and we got the big breakout. You know, Feb, March, and that whole March I went to Japan and we got that big solid run. So it seems to be the time of year for copper to really get on its step on the gas and keep moving. So it's a bit hard to sort of again sort of think what to do with this one here because we're so close to the highs. You would say you're probably targeting at least a test up around those 517 levels. Metals as a whole obviously are just absolutely ripping. So there's no reason why this thing is necessarily going to stop here. And if you get that through this area here, well, you can see the levels that we've seen previously. This is new highs going through all these areas here. I wouldn't really put too much stock on this, but could potentially. Not a big fan of that. Yeah, we'll see how we go. I mean, look, it's just there for reference kind of thing. We'll see how it works. Get onto the lower time frame, and this thing is just going straight up. So again, look, I think it's too late to sort of buy it if you want to buy it, but I think sort of certainly this thing is in control. I think any sort of dips are just going to be bought up as well. if you were to be saying this were a bit of a channel, which hasn't super sort of respected, it did for a second over here, but obviously then just cruised through. It is in a little bit overthrow area, so should it come back down, I'd probably be looking for, this a touch up of this sort of rising support, and then some sort of buy off that level there. To give it a bit of a shot there. Save yourself buying the very tops over here. But as you can see, I think these are the kind of areas, the previous high, which is there. They're your sort of highs that we're looking for here. Obviously more than the previous one, 517. Very close. All right, and finally, just a little bit with USD China. This was one that sort of tried to sort of push through this sort of falling resistance here yesterday, tried to sort of leapfrog off it, but unable to do so. They really are just sort of selling US dollar right across the board over here. So, look, it is sort of holding this sort of support area, but as I said, I think sort of US dollar coming down into that little support area, DXY, I mean, with US dollar there. I think once that breaks, you're going to see this one break. We are going to see this push down towards sort of major, well, kind of price target 710 and then low sevens at 704. I think is pretty much where this is going. It's tried, it's dribbled, it's dribbled, it's dribbled, it's dribbled. Eventually, it's just going to go bang. I'm probably going to see a fast explosion, I would say, once that goes. Again, look, I'm still open to the idea of them trying to screw people, but I think the inevitable is this is where it's coming down over here. Gold to 3100, Aussie 64, 65, and then sort of, I'll see what happens with silver as well, but don't sort of use this so much in relation to silver. But I think that's what we're going to see in sort of, correlations across the board. All right, cool. And we've already done the news. So we've got Aussie data out in 8 minutes. So here we go. All right, that's it from me.